Hello and welcome to the CNBC TV 18 special. I'm Shireen Khan and I have a very special guest joining me today on the show, Ruchir Sharma, as he discusses his new book, which has already made it to the New York Times bestsellers list, The Rise and Fall of Nations. Ruchir, appreciate you joining us again on CNBC TV 18. I'll talk to you about the book in just a second, but let me ask you what everybody's talking about, and that is Brexit and what it now means as far as the global economy is concerned, what it means for global equities. How concerned are you about the implications of the Brexit? People are still trying to grapple and fully come to terms with it.
Well, listen, I think what's really going on here is that this is a world badly disrupted by what happened in the 2008-2009 financial crisis. And there are a few trends which have been playing out since then. And Brexit is really the big manifestation, I think, of those trends. What are these trends? One, that we're seeing a global revolt against leaders everywhere in the world. And so, it's very popular to talk about the fact that Brexit is just about leave or remain in UK, but I think there's a bigger political picture here, which is the fact that there's a revolt against the establishment taking place across the world in many countries. So we track the popularity ratings of the 20 largest countries in the world and the popularity of the leaders there. And that is currently at an all-time low. At an all-time low, exactly. Across the board? Across the board, the average. And what that's really telling you is that if you come in the way of the voters by being in power, you're likely to be thrown out. And that's the big turn from last decade. Last decade, our work was showing that 2 out of 3 incumbents were getting re-elected. Now what we're seeing is that just 1 out of 3 incumbents are getting re-elected. And so that trend is just accelerating. So there's a big global revolt taking place, and that's a big miscalculation, I think, that the British Prime Minister did, which is that he sort of mixed up domestic politics with this vote. And I think that this vote is as much a rejection of him and the anger that the popular support against him as it is about the core issue of Brexit. I think this is one thing which has been underappreciated. But what does this then mean, Ruchir, as far as the EU and the future of the EU itself is concerned? You were talking about incumbents not being voted back to power. Netherlands, Germany, France, these are big elections that we're going to be faced with a couple of months down the road. What is the future then as far as the EU is concerned? I think the same pattern, which is the fact that the incumbents are likely to keep losing ground everywhere, but it's not always for the worse. I think this is an important point, because if you look at what's happening in Latin America, what we're seeing is that the incumbents there are all getting voted out. But the incumbents happen to be left-wing leaders there. Instead, who's coming to power in Latin America now are more business-friendly, market-oriented people are coming to power in Latin America. So this is a very differentiated picture. It's not the same picture everywhere. In Europe, yes, this is happening. But the main story is that the incumbents are getting voted out, and it's not always that the populists are coming to power. So I think this is one big trend. The other big trend which we're seeing across the world is deglobalization. So we all grew up in the 1980s, 90s believing that this is a world which is going to get much more integrated, where people are going to trade much more, borders are going to open. And it's at an all-time low, cross-border flows at this point in time. Yes, that's right. In terms of both, cross-border capital flows have shrunk quite a bit compared to at least where they were last decade, and even trade has begun to collapse. So trade growth today is basically stagnant, and that's the first time outside a recession that we're seeing such low trade volumes in the world. So this is deglobalization, which is that countries are turning more inward, protectionist barriers are going up everywhere across the world, and this is what's something that we're seeing even in Britain. That's the resentment against it. And the third big trend is income inequality. This is a very big deal, because if you look at the voting patterns even in UK, you will see that the places where which voted to remain within the European Union were really the rich areas, the relatively rich areas like London. But London has benefited so much from globalization and from the fact that you had such good flow of capital running through London. One important statistic, that before the global financial crisis, London's per capita income relative to the rest of UK was about 60% higher. Now it is more than 70% higher. And similarly, London now is the home to one of the largest concentrations of billionaires in the world. So an explosion in wealth which has taken place, and that leads to resentment amongst the people outside about what's going on. You use the word recession, Ruchir, so let me ask you this in the context of the recent developments now. Do you believe that the possibility of a global recession is higher today on the back of the Brexit? Well, I'd say marginally yes, because my own sort of thing has been that recessions follow expansions, just like nights follow day.
Yes.
So like once every 8 years or so, we tend to have a recession. So we should not be that surprised to get a recession. But I'm not that sort of convinced that what's happened in UK and the contagion of that for the rest of European Union may cause a recession. Partly because these economies haven't come to matter that much for global growth. Because they've been growing so slowly, they haven't contributed that much to global growth. So any changes in their economic growth rates don't have such a large impact. As you know, my bigger concern over the last 12 months has been China,
yes.
Which is the fact, and this is very important, because even if you look at the Indian market, the sensitivity to what happens in China today is much greater than, let's say, the sensitivity to what happens, let's say, with Brexit. Like, when China was in a free fall, in the late summer last year, or then again earlier this year, the Indian market and had a much stronger negative reaction compared to what has taken place in the first few days after Brexit.
So since we're talking about the markets, Ruchir, let me ask you about what the outlook is in the context of the recent developments, specifically as far as India, because there is one camp that believes that we're largely insulated, that the story for India is looking good, we're an island of prosperity, if I could call it that, or an oasis in the desert, as somebody else on the channel pointed out. But how would you look at India in terms of valuations, in terms of the macro stability, and what that then bodes as far as the markets are concerned?
Yeah, this is favorite sort of sell-side trope of looking at valuations. One thing which I'm convinced about is that valuations just don't tell you anything about how a market's going to do. We have looked at it across the emerging market universe, and the valuation of one country versus the valuation of another tells you absolutely nothing about what's going to happen in the future. So that's a very poor guide. What does tell you about what's going to happen in the future is which countries surprise on the upside in terms of economic growth, and which countries disappoint on the upside in terms of economic growth. That is the single most powerful predictor of returns over the next 3 to 5 years. And I think in that regard, as far as India is concerned, I agree, with the general view that India looks relatively better compared to everybody else. But as you know, that my favorite line, even from the book, which we'll speak about in a bit, is the fact this is a country that's consistently disappointed the optimists
and the pessimists.
And that's something which I would keep in perspective as far as India is concerned, that we all tend to get very carried away by our own talk here. There's an echo chamber where everyone says the same thing, and everyone comes here and says the same thing, our fundamentals are fine and stuff. And I'm just a bit concerned.
Is it overhyped today?
Well, I'd say expectations are very high out of India. So, for example, if you look at the best performing markets today in the world this year, they're like Russia, Brazil, because expectations were so low, they were beaten down and they've risen. On India, it's the weight of expectations, which is something which is, I think, sitting on this market a bit heavily.
Who are we likely to disappoint today, the optimist or the pessimist?
Well, if anything, at this stage, I guess it's got to be the optimist, just given how optimist people are about this country. But I still feel that on a relative basis, from a fundamental basis, on a 3 to 5 year, India does look relatively better. That's what the rules of the road framework tries to say. But for now, I'd say that we should be a bit careful about the fact that expectations are very high.
Okay. Ruchir, let me also just ask you very quickly about, what you foresee now as far as capital flows into emerging markets in the context of the Brexit. Do you see it impacting significantly capital flows, especially into countries like India?
Yeah, I think that we should just in general expect lower capital flow. That's a fallout of deglobalization. And the biggest contributor to lower capital flows today is that cross-border bank flows have reduced significantly. So you have much less bank lending going on between borders. Like European banks do not want to raise emerging market exposure or India exposure, not because they have any view on that, just because they've turned much more inward because there are problems at home. Same thing with even many American banks. So these banks which lent so profusely to emerging markets now are not keen to lend that much. That's just a reality. Having said that, one place where we have seen a pickup in flows in India is FDI flows. That FDI flows in India have really picked up. In fact, as a share of GDP now, India is among the highest recipients of FDI flows in the world. So flows are changing. The nature of flows is changing, but in general, India, I think, is likely to receive less capital flows in total because cross-border bank lending has collapsed across the world, and that was the largest share of cross-border capital flows last decade.
Before I come back and talk to you about India, let me also ask you about the US and how you see the US. And specifically, given what's happened, do you believe that the possibility now of the Fed moving on hiking rates is perhaps not something that we need to be concerned about? Is that over and done with?
Well, nothing is over and done with, but I think that the market's been way ahead of the Fed, which is the markets never believed that the Fed was going to hike interest rates this year. They briefly priced in 1 or 2 rate hikes when the Fed seemed extremely determined to go down that path. Those expectations have now been snuffed out. So I don't think there's any surprise element left here. I don't think the market expects the Fed to do anything for the next year or so. And given how weak the global economy is, I'm not surprised at that conclusion.
And given the fragile state of the global economy, do you believe that central bankers around the world will continue to be even more accommodative?
Well, I think there's a limit to that, because I think that one thing that central banks across the world are beginning to realize is that there are limits to their monetary policy actions. I mean, one thing we have seen, and this is something which has been even true in UK, that asset prices have gone up a lot more than economic activity. And when asset prices go up a lot, that does lead to a lot of resentment about what among the middle income and the poor people, because they don't own these assets like stocks or bonds, and those prices have gone up. Even high-end property across the world has gone up. So I think central bankers have to be a bit wary of the fact that they can keep pumping all this liquidity out there, but where is it finding its way? And if it keeps finding its way into asset prices, that is a definite negative.